Hey guys, and welcome back to another video. Today I'm going to be breaking down a little bit of GBP USD and the long position that myself and the current members took yesterday. So with that being said, let's go ahead and break it down from top to bottom. This is essentially piecing everything together. All the system that you've learned individually through the course is now being applied together to formulate the strategy. Let's start on the 4-hour time frame. So the first thing that you'll really notice is that right now the 4-hour time frame is in a range. So let's go back to when it actually gave us some structure. So as we can pretty clearly see right here on the left, we have bearish structure, which is high, lower low, it's lower than the previous low, which was, in these regions. Lower high and lower low externally. And as it stands right now, we are currently ranging externally from this high right here to this low right here. Now, all in all, we are expecting on a macro level for the lows to be taken out at some point in time. However, now let's go to internally and look at it from a little bit of a different perspective to understand where the short-term directional bias should come from. With that said, let's go back into here and let's take a look at this. Is still our high because there's no internal structure inside of here, in all honesty. Possibly you could consider this internal structure. So that would be our lower low. And then this would be our change of character. So phase one, reversal, change of character up. And then you could say, okay, low, higher high, higher low, higher high. Thus a break of structure up. After this, we have a lower low, which is our change of character back to the downside. So at this point in time, you're pretty much expecting this low now to be taken as we've had the reversal internally. The internal has aligned with the external. However, in this scenario, whatever reason, possible news event as it looks like, we've had a huge run on liquidity. So we've actually had another change of character. And this is why we say that nothing is confirmed until it is confirmed. So essentially put, change of character is phase one, but you need an additional break of structure for a phase two confirmation. And that confirms pretty much everything. So we only had a change of character down, and now we've had another change of character up. So at this point, you just really want to be reacting to the market, and there is no clear bias as stands until we get some more confirmation, allow the market to show more of its hand, and it does. It takes out the lows, and we have yet another change of character. So change of character, change of character, change of character. Down. And yeah, that is essentially the low. So we have a higher high, lower low, lower high, and then lower low. So after this, we have yet again another change of character to the upside. So we are likely reversing. At this point, by the way, guys, as you can see, the previous external swing low has been actually taken out. So there's our break of structure. Down. So now the external high is here and the external low is here. Internal can play internal. But this is what I have mapped out, right? So I didn't consider this right here a pullback. There was no real, continuation, whereas you see here price actually pulls back. Price actually pulls back with its bullish structure. This pretty much just sat in a range, liquidated with this wick here, and then continued. I didn't consider this a pullback. For me, there was no structure printed. This was just more of a reaccumulation with a liquidation. So for that reason, I just marked out this low right here and this higher high. And then essentially we have, you know, this, well, essentially price does put in low, all internal of the internal in reality. And then we have, so we're still bullish. And as you can see, internally we're printing lower lows, lower highs. And then we have the shift, right? This is essentially where, because it's bullish and price comes in back into the area of demand right here from the origin area, you would expect that once this internal piece of structure was broken, that we would then go and put in a new higher high, right? Essentially, that's what I was expecting when this was playing out in real time. That's not exactly what happened. So first and foremost, you can see that there's huge amounts of liquidity build up in here, which is of course cause for price to go and seek that buy side liquidity. But after that, essentially price runs on the liquidity and then gives this, you know, higher high, higher low, higher high, gives this shift in here, right? Which is a shift to the downside. So at that point, when we have this shift to the downside, I'm expecting, okay, so this low right here failed to break this high right here. That means that this low is weak, right? So I was expecting, okay, cool. We're just basically going to realign with the overall external market structure. And yeah, that be it essentially. And this be ran, and you know, we have relatively equal lows here, so that's liquidity, which is caused to go lower. So yeah, that's essentially what I was looking at. But then when we had this shift in here, yeah, so when we had the shift, that's what I was looking at: lower low, lower high, not structure, and then lower low. So as it currently stands, you know, this internal piece here is bearish, but now we are reacting to this level of demand, right? And we've actually failed to break it, and we've actually given a push out. So if we break this high now, I will be expecting this high to be broken, because what would that mean? It would mean that this high right here has failed to break this low right here, meaning that this high right here is weak. So yeah, I mean, all in all, not the easiest price action to understand, but I mean, if you can grasp yourself to understand this range, then trading trend in markets becomes actually very easy. So that's the 4-hour outlook. And luckily we don't trade based off mainly the 4-hour, we do our stuff mainly on the 15-minute. So we can really understand now on the 15-minute what's happening. But I will say this, for sure, like, this is the high. I wouldn't be surprised if we respected this level, as you're kind of seeing like some level of rejection happen from here. I'll probably see a run on the highs and then a takedown of the lows, which is kind of what I'll wait for. But yeah, again, price can go either way. And that's the thing with ranges. Like when price has created such scenarios where it can go either way, then there is really just no point trying to predict it, just actually waiting for the reaction. So we have sell side liquidity also built up in the form of a trend line. Let's now drop down to the 15-minute time frame, from the 4 to the 15. And let's look at that. So pretty much when we're expecting a higher high, this is our 4-hour point of interest right here that was external. We was expecting a higher high. That didn't really happen. If we start from here and we look at external structure for the 15, we have this higher high, shift, change of character, dome. So bearish external for the 15, bearish external for the 15. When do we break the lows? Pretty much here. So this is the low, bearish external for the 15. And as it stands right now, we have barely broke the M15 swing to go bullish. Like literally barely, but a break nonetheless. But as we know, momentum is important. So with momentum comes an understanding of conviction, right? The more momentum, the more conviction. So yeah, that's it being said. We've broken it, but very barely, and we have huge levels of liquidity up in this range. So overall, I'm very interested to see how this kind of plays out. But if we just dive into the 15-minute and understand really how we got into the position, really and truly, we are bearish, but then the internal, the break comes here, so we are like something like this, and then the break is shut down. So this is really where the structure was from high to low, and then once price broke this with a change of character, that was our confirmation that we were expecting higher price delivery on the 15-minute. Probably come and test the swing level, which, you know, we did. Lots of internal noise, to be honest, but it gets clearer once this happens. So we had huge levels of liquidity buildup, and then we had the run out of all of that liquidity with this. And of course, once we know the sellers have been induced, then the real intention for push price higher was able to come in. So if you just take the piece of information that's valid, you will know that this was essentially a lower low, but then we made a higher high. So price at that point was essentially bullish, right? And that was essentially what we were looking to trade out of. We were looking to trade from this low to this high and basically take out the rest in liquidity that had been built up in this region. So I said, okay, cool, let's pull out our fib so we can understand the highs and the lows. We can understand the low right here to the high right here. And then if you really just mark out the 50% and you want to really take any point of interest, you know, in that bottom 50%, because that is essentially the discounted region of price, you want to see a pullback and then a continuation. So I had this one marked out right here. You can see this inside pivot created area of demand. And then we also have the pivot created demand down here in the origin. Right here, right? Where the essential reverse takes place. So these are the two areas that I was looking at. If price comes into these areas, I'll wait for the entry confirmation, as we know, the 1 minute shift. So let's replay price down into here when we first tap into the level on the 1 minute time frame. So we come in and pretty much, if you just look at it from a structural perspective, you can see that the high and the low exist here. So let's just actually remove this and pull this out, So looking at it structurally, we can see we have the high and lower low. So that's the only two pieces of real importance that we need. We just need to understand what the current trend was when we tapped into the point of interest and where the high was. So that was the real breaker structure to the downside. And this was the high, this was the lower low. So what we were looking for? We were looking for, at this current time, a shift. We were looking for the 1 minute to shift from bearish to bullish, to align with the 15-minute, right? That is essentially our understanding of fractals. So play price out. Price kind of hovered in around this area for a while, creating some internal higher highs, higher lows. Higher highs, again, didn't break the lows. So showing us confirmation that we are building some solid foundation of buy orders to work up off. And then essentially we haven't taken out the high yet. And then the high is taken out with the change of character. So the change of character actually comes in here. And if you look internally, you're looking really at this low and this high. But because in this scenario, there are, you know, so many 1 minute candles, this is something I'll often do. If you look at it, like, there's no real unmitigated areas of demand. So the area I'd be looking for is the range that created the origin of the momentum, right? It's essentially price was pulling down and then price came in. So you could take the overall sell to buy, because that's where it's likely that the majority of the orders are. Then you can really refine that down to the last pretty much sell to buy in that range. And that's what you could use. Better yet, you could actually go to a higher time frame to get a clearer understanding. So going to a 3-minute time frame, you can clearly see that this is the pivot right here. And even on this scenario, I went to the 5, don't just see it. When I went to the 5-minute, everything became like crystal clear. This was the only piece of unmitigated demand that had the reversal, right, the V-shaped reversal, which the orders started coming into the market. So once the orders are starting to come into the market, that shows me intention. Now it's likely, because we know that they can't place all their orders, they'll come back, collect more orders, and then continue. And that is the whole reason for supply and demand zones. So that was my entry point, and that was my, the reason that I took this, and I went down to the 5-minute to confirm it. But if we go back to the 1 minute, what you'll see is it's just literally what I showed you just a moment ago. So it makes sense. But yeah, it's clearer just for this example on the 5-minute, and that's what really gives me the push. And that's the beauty of having the different perspectives of timeframes to clear up the picture. So that was essentially where we were looking to get into the market. Now we need to understand targets, right? So we had this one, and this was in New York session. So now you need to understand targets. Well, just to zoom out for a second and understand the swing low, swing high, swing low, higher high. Okay, so we're expecting a higher high. We have tons of built-up liquidity resting atop these, across these top highs. So that was my target. My target's always weak structure because it's the most logical. 5 pip stop, take out the high 9.5R. That's what I was looking for. So let's play this out and see essentially how it really worked out. So price essentially ran up, which is perfectly okay. And then price essentially come back, pulled back, and then tagged in with a nice reaction. Go to the 1 minute time frame and take a look what that looks like. Looks like this. Right, had you had not got in here and you waited for additional confirmation, perhaps you could have looked at something like low, lower high, lower low, and look at this high being taken out as additional confirmation, perhaps. I'm not even sure what actually happened there. I didn't actually monitor it. So price comes in, taps. Okay, that's where it really breaks with a body, but there's no real area of supply demand, unless you take the whole sell to buy range. Could use that, right? Could even refine it down to the last 2 or even the last 1 if you really wanted to refine it out a lot. And then yeah, had you had not been able to get into this one, or you wanted to see additional confirmation, you could have waited for something like that. And then price pretty much runs. Now what I had in place was this high right here, because it's internal. It's an internal weak high. Because we because we have the option, on the 15-minute time frame for lower prices, because we have this area of demand right here that could be hit and then go. It's not guaranteed that price is going to come from this level and take out the highs. So taking off 5.6, taking off some of the position at 5.6R at this weak internal high, because it makes sense structurally, was the play to go to. Now, just because this time for me was, like coming up to midnight, I was asleep. I wasn't actually able to set it, and I didn't break it up into 2 positions. So I just had it full TP. But what I would have done is taken that off or set 2 positions. Yeah. With that said, price pretty much runs right to the take profit level and then starts reversing, right? It literally just misses the take profit level by like less than a pip and then starts reversing. In all honesty, like when we got to this level, I wouldn't have been afraid to just close the position. Had seen it touch this level and not take out, and then seen some of the rejection, I would have just closed the position, even though it's probably likely that price would have just come down and took it out. I would have just closed the position just to be out of the position from a psychological perspective. The price ends up coming all the way back down anyway. And then let's get into, because now we're in Asia and there's pretty low volume, let's get into where I was looking at the market. So essentially woke up, checked the position at around about 20 past 5, and we had come down here, but then we was making our way back up. In the gym we had this push down, and then we made our way back up, took out the highs. We were really respecting structure. So I had the confidence in the position to pretty much just hold on. And then at this point, I took 5R, right? When we had broken this high, I took the partials off that I would have taken off before, took some of the position off at 5.5R, just to secure and lock in some profits, and then leaving the rest to run for the full 9.5R. But again, what I actually did, again, this is just for me psychologically, was I had this mapped out because this is a point of interest that, you know, has shown some volume come out of it. So when price got in there and I seen this, I ended up just closing the position at 8.44. Ended up closing the position manually in this position here. Yeah, when I started seeing the push up, the rejection, and maybe it pushes up again because I closed the position. Yeah, I must have closed the position somewhere around here when it came back up. Yeah, again, logically speaking, should still no problem go and take out the highs because it makes sense, but just for psychological reassurance to be out of the position and focus on other things I want to do, such as live my life or work on business or whatever it is I want to do. Just easier for me to be detached from that now emotionally, psychologically, and just get on with my day. But I just wanted to break that down, give it you full lens of perspective, and yeah, I hope you guys enjoyed.